the realm of investment, the loudest advice isn't always the most lucrative. Contrary to the popular rally cry for quick gains, Warren Buffett, one of the most successful investors of our time, champions a philosophy that seems almost counterintuitive. Patience over haste, quality over quantity. Now, before you dismiss this as old-school rhetoric, ask yourself, have you considered the power of patience in your investment strategy? Are you ready to dive deeper into the wisdom that has fueled Buffett's journey to billions? By subscribing to and watching videos like these, you've already set yourself apart. Congratulations on being part of the elite group that is actively pursuing self-development and wealth building. It's no small feat in a world constantly buzzing with distractions. Did the introduction make you rethink your investment strategy? Drop a yes or no in the comments, and let's dive into the transformative keys to building wealth through investments, Buffett style. 9. Understand the business. Behind every stock is a company. Warren Buffett doesn't just look at the numbers. He looks at what the company does, its competitors, and its place in the industry. Have you ever bought a stock on a tip without knowing what the company does? It's like buying a piece of a business without understanding what it sells. Think of it as going grocery shopping with a blindfold. Addressing skepticism, you might think this requires a business degree, but in reality, it starts with curiosity. Begin by reading about companies that interest you, and soon, you'll find yourself making more informed investment decisions. 8. Margin of safety. Invest with a cushion. This principle is about buying stocks for less than they're worth, creating a margin of safety. It's akin to buying winter coats on sale in the spring. You know they're worth more, and you're getting a deal. Skeptical. It's natural to question if undervalued stocks exist in today's information-rich market. However, opportunities arise when investors overreact to bad news or misunderstand a company's potential. Start by learning to evaluate a company's intrinsic value and compare it to its current stock price. This practice could be your safety net in the volatile world of investing. Have you ever found a stock that felt like a steal? Share your margin of safety moment in the comments. 7. Be greedy when others are fearful. Contrarian investing at its finest. When the market is in a panic, assets often sell at a discount. Buffett sees this as a buying opportunity. Remember the last time you were in a crowded room and someone yelled, "Fire." The instinct is to run with the crowd, but often the real danger is in the stampede, not the threat itself. It's not easy to go against the grain, especially when it comes to your hard-earned money. But ask yourself, are you letting fear dictate your investment decisions? The next time the market takes a dip, consider looking for quality stocks that have been unfairly punished. 6. Invest in what you know. Stick to your circle of competence. It's tempting to jump on the latest investment trend, but Buffett advises investing in industries you understand. Imagine you're a chef. Would you rather invest in a promising new kitchen gadget or a tech startup whose business model you can't grasp? By staying within your circle of competence, you reduce the risk of unpleasant surprises. Skepticism arises when people fear missing out on the next big thing. However, history has shown that understanding your investments leads to better decision-making. What's an investment you made outside your circle of competence, and how did it turn out? Your stories are valuable lessons for us all. Please share them in the comments. 5. The power of compounding. Your best friend in investing. Einstein called compound interest the eighth wonder of the world. By reinvesting earnings, you're essentially earning interest on interest, creating a snowball effect. Think of planting a tree. In the early years, growth seems slow, but given time, you'll have a towering giant. It's easy to underestimate the power of compounding, especially in our instant gratification society. Start with what you can, reinvest your dividends, and watch your wealth grow over decades. 4. Avoid debt. Debt is the wealth killer. Buffett advises against using borrowed money to invest. It's like playing poker on credit. The risks are magnified. Imagine you're swimming with a heavy stone. Debt is that stone, making it harder to stay afloat, let alone swim faster. The skepticism here is understandable. Leveraging can amplify gains, but remember, it can also magnify losses. Focus on building your investments with the money you have, not what you hope to make. Can you recall a time when debt hindered your financial progress? Sharing your experience in the comments can help others avoid the same pitfalls. 3. A long-term perspective. Investing is a marathon, not a sprint. Buffett's success is largely due to his long-term outlook. In a world obsessed with quarterly results, he thinks in terms of decades. It's like planting an orchard. You don't expect fruit in the first year, but with patience, you'll enjoy a bountiful harvest. This perspective challenges the day trading mentality and requires a paradigm shift. Think long-term with your investments and resist the urge to react to short-term market fluctuations. 2. Discipline over emotion. Master your mindset. Emotional decision-making can lead to the classic investing mistake: buying high and selling low. Imagine if you only bought groceries when you were starving or sold your car in a panic every time gas prices went up. It sounds absurd, but that's how many approach investing. Cultivating discipline means setting a strategy and sticking to it, even when your instincts tell you otherwise. This approach is especially critical in managing the ups and downs of the market. Have emotions ever led you astray in investing? How did you learn to keep them in check? 1. Constant learning. The key that unlocks all others. Buffett spends a significant portion of his day reading. He understands that the more you learn, the better your investment decisions will be. Imagine investing as a landscape that's constantly changing. To navigate it successfully, you need to keep updating your map. Whether it's reading books, subscribing to our YouTube channel, following market news, or studying businesses, make learning a daily habit. Skepticism here might stem from the vast amount of information available, making it seem overwhelming. However, focusing on learning a little each day can lead to significant gains over time. By understanding and applying these 9 keys, you're not just investing in the market, you're investing in yourself. Warren Buffett's approach is more than just a set of rules. It's a mindset that emphasizes rationality, patience, and continuous growth. As we wrap up, ask yourself, which key resonates with you the most? Which one will you commit to implementing in your investment strategy? Share your thoughts and commitments in the comments below. Remember, the journey to wealth is a personal one, but it's also a shared experience. Let's learn from each other and build our wealth together, the Buffett way.